How you doing, YouTube? Policing Pips here. First off, thank you for joining on my live stream so far. I really appreciate it. I'm going to continue doing them as long as there is interest out there for them. In this video, you're going to learn a little bit about how to understand my recap videos, how to understand my live streams, and somewhat of my trading strategy, along with stuff that I do trade. So hang tight, roll the intro. If you watched my first video, you probably heard that I started my journey in the Forex markets. I have since changed my trading style, and over the course of the past few years, I implemented other asset classes along the way. Currently, I do trade Forex, stocks, options, and super actively the futures market. And if you watch my live streams, you know that to be the case. What I'm going to do now is I'm going to shrink myself down to a little box in the corner and show you some about what these asset classes are and how to better understand what I'm telling you when I'm in these videos. Now that I'm shrunk down in the corner here, I just wanted to be clear, this isn't a full education on each one of these asset classes. It's just so you get a better understanding of what I'm talking about when I'm doing my trade recap videos, doing my live streams, or any other further education, right? So, what is Forex? Forex is the foreign exchange currency. For me, when you hear me say Forex, it's going to be these pairs. I only trade major pairs. A lot of people can mix in with major, minors, all that stuff. You can get into all of that stuff. For me, super basic. If you ever hear me talk about Forex, it's going to be the British pound, the New Zealand dollar, Australian dollar, Canadian dollar, Japanese yen, euro, Swiss franc, and the United States dollar. So when I say I'm trading Forex, what am I actually doing? Just so you have a basic understanding, I'm trading one of those currencies I just listed against another one of those currencies that I just listed. Right, as you can see up here, I have the Euro USD. This is how much the exchange rate at the current value is at the moment. So you can see the value of the euro and how much US dollars it costs to buy a single euro. At the moment, it is $1.18 and 1922 pips. It just goes up and down. The standard function of movement within currency pairs in the foreign exchange market is a pip. That's where I get my name from. Policing Pips, started in Forex, started in policing, see where it ends up, right? A pip is a percentage in point, and it's just one standard unit of movement of each pair. So like you can see, it's moving up pip by pip, and that's how you earn your money, right? When I trade in Forex, I'm trading in lots. Lot sizes are usually, a standard lot is 100,000 units of this. You are trading on margin when you trade Forex. So you are looking to borrow money from whoever the brokerage is and trade your money at whatever the leverage is going to be. So I can explain what leverage is. It's using your money times the money of the brokerage in super simple terms, right? If you have 50-to-1 leverage, it means for every $1, you're able to trade 50 of the bank's dollars. And if you keep it as simple as that, then we can move on to the next. Next in my trading portfolio, we have stocks and options. For the purpose of expediency, I'm going to place these two together. First, let's get into stocks. This is the most common, well-known aspect of trading. And when people hear about trading, they think of the stock market, Wall Street, even if they've never dabbled in trading themselves. So what are stocks? Stocks are publicly traded companies in which you could buy a small piece of. And these pieces are known as shares. So when you buy one share, you hear me say I'm buying 100 or 500 shares. That's 100, 500 pieces of that company. When it comes to trading companies, there's a wide variety of costs, from companies that are worth over $450,000 and companies that are worth less than 1 cent. And you could choose anywhere in between and find a happy medium. All you need to know about from this video is that when I say stocks or I say options, it means I'm buying and selling pieces of these companies in order to make a profit. I do make money if they go up, if I'm buying them, or down if I'm selling them. And when I'm trading stocks, most of the times I'm going to be playing their options. So let's get into that now. What are options? So we already did our stock portion of this section. Now we're going to move on to what are options. I shrunk myself down in the corner here so you can see exactly what I'm talking about on the screen right up here. What are options? Options are traded in contracts. These contracts are to buy or sell an underlying asset at a specified price at a later date in the future. These contracts are always traded in 100 shares of whatever the underlying asset is. When you hear me talk about options, you're going to hear me talk about certain phrases and terms, and I'll break them down really quick for you right here. You're going to have calls, which are you want the price to go up. Puts, you want the price to go down. Strike, which is the price that you want it to either be above or below at expiration, and also expiration, which is the date that that contract ends up. So if you're looking at the screen above me over here, you can see this is what an options chain looks like. An options chain just shows you the date of expiration, which will be up here in the yellow. Also has the expiration right down the center here. You have the strike price, which is the price at expiration that you would like it to be above or below. On the left hand side, you have your calls, and on the right hand side, you'll have your puts. These prices are how much each of these contracts for 100 will cost, and the way to do a calculation on how much it will cost, you just multiply that number by 100. Pretty simple, but also confusing if you haven't done it. So for me, I trade option spreads. Spreads, for purpose of this video, limit your downside and also limit your upside, but that limiting of your downside loss really helps you manage your positions for moving forward. So also on my IRA, I am not allowed to make naked calls or naked puts. Naked calls would be just buying one of these without a downside risk mitigation. Over here, you can see that this is just a single options chain with no spread or anything like that. It is just you would buy it and sell it unsecured, naked call or naked put. What naked means is that you have nothing else protecting it. It's just you picking a price, and it either is going to be above it or below it. Being above or below could lead to unlimited loss potential in those naked calls or naked puts. So that's the basic explanation of that. And then I'm going to go on to, if you hear me make a call, what it's going to be, and we'll move forward to the next asset. So like I said, options are pretty confusing, and there's so many different ways that you can play them, and I really don't expect you to understand everything about them with this video, or much at all. Just to say, hey, I heard you say it in that video, now I hear you in this video, now I sort of know what you're talking about, okay? So what I do is I play a vertical spread. If you look up here, you can see the spread here says vertical. The strike prices now have two prices, okay? And for simplifying terms, one is the top and one is the bottom. You want the price to be above both to get your max profit, but as long as it's between, you're going to start to see that your price is in the money. In the money just means that your option is actually worth something in the future. And if out of the money just means that it's not worth anything and it's going to expire worthless. Options do afford you the opportunity, I didn't mention it before, of exercising. What exercising means is at expiration, you have the right to exercise and buy those 100 shares at the price that you bought or sold it at. Super confusing, I know, but in time, and if you really want to get into options, I'm going to go into some more videos. But for this, if you want a visual representation of what a spread would look like for expiration and the profit, we're going to go to the Analyze tab here. Visual representation of your profit and loss. So if you look at this blue line, that's the at expiration. So if the expiration is August 20th, like it is on this one, the blue line represents that if it expires at this particular price that you'll see on the bottom here, let's call it 310. If it expires at 310, it will only be worth $329. And you can see that in the bottom left hand corner right over here. And you can see your max loss on this is negative 1670. And the pink line is what the value of it is today if it were to get to some point on this day. Today is Sunday, so the market's not open. Options are only traded during open market hours, so this price won't adjust until open market Monday. So this is just a visual representation. And my spread here is these two little red lines. So if it expired here, we'd basically break even, and that's that. But the further out you get, the higher the profit, but it caps that profit because of my spread, and it caps that loss down here because of the spread. So my max win would be 23 and change, and my max loss would be 1670. Much of the time, I'll take some of these profits off early if I feel like I ran up a certain percentage, and that's predetermined in my trading plan. So let's move on to my next and favorite asset class. Last but definitely not least is my current favorite thing to trade, and what you're going to see me trade on a more frequent basis in any live stream and any profit or loss video that I make on a trade recap is futures. What are futures? I'm going to keep this simple like every other part of this video, and I'm not going to go very deep into every little aspect of what a future is, but here it is in my layman's terms, right? A future is basically the same as an option as far as it is a contract. It allows you to trade the price of a specific thing, a commodity, a metal, equity index in the future, right? All of these future contracts allow you to buy now and either take delivery of, say, oil, however many barrels of oil you're buying, or sell it back at the price that you bought it. For purposes of day trading, we are never taking delivery, and we don't do this because we are not oil delivery, or we don't do corn, and we're not farmers. Futures were created to maintain price levels for people who have things that aren't exactly always there, right? So corn, oil, natural gas, and then it developed into indexes and all that stuff. So super simple terms, it just allows you to buy something at a later date for a specific price, and it keeps things regulated. In terms of my trading, like I said, it's traded in contracts. So each of these contracts costs you a certain dollar amount just to hold in your account, which is called margin, like we explained earlier. And the margin on these kind of gets a little bit confusing if you're not really paying attention. They vary per product, and for the purposes of this video and any of the lives that are going forward, I'm going to be trading the S&P 500 index, which is the /ES, and the NASDAQ 100, which is /NQ. These are the two main equity indexes that I like to trade. I find that I have a really good understanding of how they move, so I stick to what I understand and make myself some money. So that margin differs per product. You'll see that the S&P is around 1200. Let's see, I'll pull it up. To place one trade of the ES with just one contract, it costs $12,100 of your margin. So it'll tie up. You need to have at least that much money and more to be able to trade this product safely. You don't necessarily lose that money, but it gets tied up in margin, and you can't trade other contracts or anything like that unless you have more money in that account, right? So 12,100 for this, and for the NASDAQ it is 17,500. So you can see the price varies, the margin varies between products, and that's per contract. So as you go up, it's each contract eats up more of that margin, and that's why it's important for me to have been trading and gotten funded by TopStep. In my previous video, you'll see that I got funded, so I don't have the major margin requirements that I have here. I still do, but it's maintained by them and not me. Understanding how I make money is pretty simple, but if you're watching the video and you don't really get it, here's how it works. Futures move in ticks, okay? Every tick on the S&P here is 0.25 of whatever this number is here. I'm going to close out of the dashboard, and I'm going to show you, I'll pull up the S&P 500. As you can see here on this right side, this is just the DOM. It shows the price that it's at, and it's just a ladder step up and a step down of every tick. You can see here each tick is 0.25. So we're 44, 29, 25, 50, 75, 0. Each one of these ticks per contract represents $12.50. So if this price currently, since we are closed, it's not moving, right? Since this price currently is 44.30.25, if it were to go up to 44.30.50, which is just one tick, that increases my profit on the day for $12.50. If it goes up again, that's $25, and so on and so forth, right? That's per contract. If it goes down, you lose that same dollar amount, right? $12.50, $12.50, $12.50, and so on and so forth. So for me, Understanding how that moves per tick and how smoothly it moves and how much each tick costs allow me to set my risk parameters and be able to profit based on certain price movements. The reason I like futures is because I could catch some of these smaller moves and still profit pretty successfully on the day, each and every day. All right, like I said, this was a quick rundown of everything that I do, everything that I trade, and how I'm able to successfully pull profits out of the market. I hope you got a basic understanding of each of the asset classes that I described, and hopefully moving forward, if you have any questions, we'll be able to make more videos and explain each one in depth more, do more analysis videos. My trade recaps, you should be able to better understand a little bit of how I made money or how I lost money. My live streams, if you have any questions, I'm going to try and be live as many days as I can with work. The next few weeks is a bit rough with work, but I'm going to try my best to be on every Tuesday and Wednesday at the minimum, and moving forward, try and do it on a daily basis. So I appreciate it. If you've stuck around the whole end of the video, please like, please subscribe, hit that little bell. It'll let you know when I'm live, when I release a new video. And until next time, peace out.